Welcome to Yahoo Finance's flagship show, The Morning Brief. I'm Allie Canal. Let's get to the three things you need to know today. First up, President Trump appearing to soften his stance on China tariffs. On Fox Business, President Trump said the 100% tariff on China won't stand, calling high tariffs not sustainable. He also confirmed he'll meet with Chinese President Xi Jinping in 2 weeks. And in a separate development, a new report suggests the U.S. will offer some tariff relief to automakers, which have already paid more than $10 billion in duties this year. The comments from President Trump providing some relief to a jittery market. Futures are well off the lows of the morning, but under the surface, concerns are rising about credit risks to banks. While the country's largest banks soared through earnings, some regionals are taking it on the chin. On Thursday, Zions and Western Alliance both said they fell victim to fraud on loans to funds that invest in distressed commercial mortgages. That sparked a sell-off across the broader market, with the VIX also spiking and the yield on the 10-year Treasury falling below 4% for the first time since April. And we're keeping an eye on other key earnings today. Dow component American Express posting better than expected results ahead of the open as affluent consumers kept on spending. It also raised its outlook. The stock is rising ahead of the open. Let's get a check on stock futures. As we were just saying, President Trump striking a more positive tone on trade that helped lift futures off of their lows. The Dow is now indicated to open in positive territory. The S&P is only down around 0.2%, and the Nasdaq leading the way lower there, down roughly 0.3%. We'll see where we open in just around a half hour. But let's dig into our top stories of the day. Futures off their lows after President Trump softens his tone on China. Still, credit concerns are mounting on Wall Street, plus gold continuing its record run as Bitcoin plunges, and the White House reportedly preparing to ease tariffs on the auto industry. Joining me now is senior reporter Brooke DePalma live at the Nasdaq, senior markets reporter Inez Ferre, and senior autos reporter Praz Supermanian. And Brooke, I want to start with you because it's been a very interesting morning. We had private credit stress, regional banks really spooking markets early this AM, but then President Trump sounding more optimistic on U.S.-China trade relations. What are you seeing across the market landscape?
Allie, it's very evident right now that investors are trying to make sense of it all. We pared back from those steep losses that we experienced overnight, largely concerned, as investors were largely concerned about that trade tension between the U.S. and China, and also those regional bank concerns around credit losses. And what we're seeing this morning is that optimism renewed just a tad, especially the Dow moving higher, up about 0.1%, nearing the open here, because of comments that President Trump told Fox Business around the U.S.-China trade tension that we're experiencing. Within a recorded clip, he said that the trade tension between the U.S. and China was not sustainable. And he went on to say that I think we're going to be fine with China, but we have to have a fair deal. It's got to be fair. And that sort of boosted the optimism for investors, seemed to be what they needed, a jolt that they needed this morning before Friday's trading session. Now, on the flip side, we are seeing regional banks return, or rather see some upside here in these early innings of this Friday morning after major concerns led to steep losses on Thursday. And that was largely seen by the two banks that you see on the screen, Western Alliance and Zion Bank Corporation. What we heard from Zion, which is based out of Salt Lake City, is that they disclosed a $50 million loss in the third quarter because of a bad loan. And Western Alliance also said that they filed a lawsuit against a borrower over fraud as well. And that actually spoke concerns that were already happening since September, when two bankruptcies were filed around a subprime auto lender, Tricolor, as well as an auto parts supplier, First Brands. Now, First Brands then had exposure to Jefferies, and so we saw Jefferies stock decline as well. But we are getting some bullish calls on the street this morning that's renewing some of that optimism here. We did hear from Baird Capital that for Zion Bank Corporation now might be the opportunity to buy in. They upgraded the stock from neutral to outperform, saying that this could be a buying opportunity. But take a step back, take a look at the VIX, which we're seeing now come down. Earlier this week, it rose to the highest it's been since April. As investors, that's sort of a fear gauge of investors right now. And clearly, we're experiencing lots of volatility within this market, especially as we make our way into the middle of October.
Yeah, all very interesting. And according to CNBC, Treasury Secretary Scott Bessent is expected to speak with a Chinese trade counterpart at some point today. So perhaps we'll be getting some more headlines on the trade front. And Inez, that's also kind of triggering some changes in the bond market too. Although the 10-year yield is still firmly below 4%, although we have risen slightly on the yield as investors sell their bonds, maybe turning a little more risk on. What are we seeing across the safe haven space? Because there's been some pretty eye-popping moves, even just over the past week.
Most definitely. I mean, gold is headed towards its best week since 2020. You have seen record after record. And when we saw equities selling off yesterday, you saw gold that was still hitting all-time highs. Now, gold is sort of right now easing a bit. It was going towards 4,400. It may have some resistance around that level. The question is this big, massive rally that we've seen in the gold space as a safe haven. What is this telling us about the economy? What is this telling us about the future? What is it telling us about money printing, about the expectations of the Fed easing? Is it easing because the economy will be deteriorating, especially now given what's happening with the regional bank woes? So those are some of the questions surrounding gold. But still, you have seen this massive rally year to date. If we do start to see some pressures with equities, if we do start to see some heavy selling, then you could see margin calls and you could see gold selling off. But keep in mind, big buyers are central banks here, and the central banks won't be selling. They are not sellers. They are stuck buyers when it comes to gold.
Yeah, and as gold continues to rise, we've seen some serious sell-offs in Bitcoin just over the past 5 days. Bitcoin is down 8%, trading just around $105,000 a coin. And in the meantime, you have oil that has really come down. That's led to the lowest gas price, I think, since January. What's sort of driving those two moves?
Right. Well, with respect to oil, you have the situation with Russia and Ukraine. Today, President Zelensky of Ukraine is going to be meeting with President Trump. He had a conversation yesterday with President Putin. So if you do start to see Russian oil flowing more freely, then that would sort of go in line with the oversupply that the market is expecting. And the market analysts are expecting that next year you're going to see oil prices that are lower because of an oversupply in the market. You have OPEC Plus that's also increasing its supply. With respect to Bitcoin, you've had a lot of leverage calls. You've had long liquidations. You had the mini crash just last Friday after President Trump announced those threats, tariffs against China. So Bitcoin has been a little bit of a head scratcher for the Bitcoin bulls because this is supposed to be sort of a stellar month when it comes to Bitcoin. And the Bitcoin bulls are expecting that you would see some rotation going from gold into Bitcoin, with that rotation being sort of a historical rotation that gold front runs Bitcoin. So it has definitely been acting like a risk on asset, and investors have been fleeing from that risk on asset.
Yeah, definitely not October for Bitcoin, which was the expectation. And meanwhile, as markets continue to wade through all of these trade uncertainties, policy uncertainties, there was a bright spot for the automakers. Bloomberg reporting that the White House is preparing to ease tariffs on the auto industry. Praz, you cover this space closely. What do we know so far, and how significant would this be for the auto space?
Yeah, it seems like after much lobbying by the automakers, relief could be coming for them, right? So Bloomberg saying that the Commerce Department will announce a 5-year extension of an arrangement that allows the automakers to reduce what they pay in tariffs on imported car parts, right? So the prior deal was going to sunset in 2 years. And the way it works is that basically you take that, you can offset the 25% tariff where you complete cars, right? So if you complete cars in the US, you get offset about 3.75% of the value of that American-made car, right? So Bloomberg says that after months of lobbying by the automakers, like by Ford and GM in particular, this relief is coming because the tariff pain has been pretty severe, right? We saw Anderson Economic Group say today that tariffs on cars just from Mexico and Canada, the tariffs on the autos and auto parts, hit $6 billion this summer. That cost and will top $10 billion by the end of this month.
All right, we will see. Certainly a lot to track this morning. Brooke, Inez, Praz, thank you so much for joining. Coming up, much more on Morning Brief. We bring you today's top trending tickers as we count you down to the opening bell. Now time for some of today's trending tickers. We're watching drug makers American Express and Luxottica. First up, makers of GLP-1 drugs Eli Lilly and Novo Nordisk. Shares of both companies falling after President Trump said he expects the prices of drugs like Ozempic or Zepbound to be much lower, saying out-of-pocket costs will be capped at $150 a month. Currently, a month's supply of Ozempic costs roughly $1,000. The comments coming as the administration is negotiating with drug companies for lower prices in exchange for a reprieve from tariffs. Next up, American Express, the company reporting earnings for the third quarter. The credit card provider had record revenue of $18.4 billion, raising the low end of its full-year revenue growth outlook to between 9 and 10%. American Express saying credit card spending rose 9% in the quarter, driven by its most affluent customers. Finally, shares of Ray-Ban's maker Luxottica hitting a record high after reporting stronger than expected sales in the third quarter. The company crediting its partnership with Meta to create AI-powered smart glasses for driving its nearly 12% revenue growth in the quarter. And you can scan the QR code below to track the best and worst performing stocks with Yahoo Finance's trending tickers page. Well, Future is pairing earlier losses after President Trump signaled a 100% tariff on China was not sustainable. During Thursday's sell-off, the 10-year yield hit the closely watched 4% level, and the VIX reaching its highest level since April's Liberation Day tariffs were announced. Joining us now is Liz Ann Saunders, Charles Schwab Chief Investment Strategist. And Liz Ann, there's so many nuances within this market, and even just today, all the whipsaw that we've seen with these headlines. I guess, what do you make of what we saw earlier, the sell-off with the regionals, private credit stress, and then recovering a bit off of those more optimistic comments from President Trump?
What I think is interesting about what's happened with the regional banks and these recent mishaps is it further highlights the bifurcations that exist more broadly in the economy. So when you think about the fact that the Zion's news, the Western Alliance news came right as we were getting reports from the larger banks in the beginning of earnings season. And given that the larger banks, their borrowers tend to be much higher in quality, higher in income. So you see these bifurcations, and it reflects kind of the K-shaped nature of the economy. You see it in inflation data, you see it in consumption data, and it has translated into market behavior too. There's just sort of the group of haves and the group of have-nots.
Right, the bifurcation of the consumer and then the bifurcation within the actual stock market. And we'll talk about tech in just a second. But when you look at what's going on with the regionals, and to borrow Jamie Dimon's quote, a few cockroaches means there likely are more. How do you separate what's idiosyncratic or more systemic by nature? Are there certain clues or signals that you look at that would maybe spook you a bit more? Well,
to measure whether it's spreading sort of up the size spectrum, listen to the larger companies. Analysts undoubtedly will be peppering the companies they cover with a lot of these questions. Look at broad measures of credit spreads, which have not blown out. So I think there are metrics to watch filtering into the equity market, continued move higher in the volatility index. But I think that we're probably in a somewhat similar situation to the early part of 2023 when we had the mini banking crisis. And you did have a period where it was an infection more broadly in the market and in the larger financials, but ultimately things settled down, and in fact it triggered some consolidation. And it wouldn't surprise me to see some of that consolidation.
So shades of the SVB collapse potentially?
Hopefully nowhere near as serious, but it reflects the lower sort of quality nature of many of the borrowers down the regional into the regional banks, and the fact that we're somewhat late in the lending cycle, and you're starting to maybe get a sense of a little bit less proper due diligence, which is, I think, part of this story. And I think it sort of puts the larger financials in a position to really make sure that due diligence is up to snuff.
Yeah, interesting. And I'm sure the Fed, which meets next week, they'll probably get some questions about this as well, potentially.
No question.
And when we look across the stock market, I mentioned tech. And we've been hearing, is this a bubble? Are we priced to perfection? We've seen this circular investment cycle among all the major banks. Where do you sit with tech right now? Are you optimistic?
So if we think about AI-specific tech. So let's use the Magnificent Seven instead of just picking on tech, because it's a pretty diverse sector. The one thing, it's not an imminent concern, but maybe something that bears watching. So Mag 7 as a share of overall S&P 500 CapEx is about a third. So that's a pretty high percentage of CapEx driven by just a small handful of companies. Free cash flow growth for the Mag 7 has gone from more than 60% positive 5 quarters ago now into slight negative territory. This boom, I think the word bubble tends to get thrown around too much. This boom has been largely an equity financed boom. It's come out of cash flows. Now that free cash flow growth has decelerated into slight negative territory, and you're starting to see more deals that get done with debt, it's just kind of a back of mind thing to focus on. The maybe good news is there's less speculative fervor in those mega cap dominant names. The recent kind of hype cycle has gone into more esoteric, micro, small levels, like at the basket level, quantum and drones and the meme stocks. And those have come off the boil a little bit in the last several trading days. But that's where speculation that is very AI driven is now more concentrated in these kind of tiny little pockets, as opposed to in the mega cap names that had been all the rage in the last couple of years.
And that's super interesting to me, because people have told me that this is why this is different than the dot-com boom, because you have companies with really strong cash flows and balance sheets. And you were just talking about how we're seeing more of this debt financing. I guess at what point do you think we're going to start to see more of that? Is that only certain companies that are financing with debt?
Those that have seen a decline in their free cash flow yields, so that they can't finance it out of cash flows. I would say one of the keys here is there's a decelerating rate of earnings growth, but to your point, there's more there than was the case in the late 1990s. They're really, the high flyers actually had no denominator in the PE equation. So it was purely a price bubble. I think what we need to be more mindful of now is the earnings side, and a point where maybe the expectations bar has gotten set a bit too high. And you could have 1 or 2 high profile misses, even if in level terms, the growth rates are still strong. It's, I've been doing this for almost 40 years, and one of my favorite things to say about the market, and as it relates to things like trends in earnings or trends in economic data, better or worse tends to matter more than good or bad. Okay. It's human nature for us to think that's still a really strong growth rate, but if it's a decelerating pace, that's something to be mindful. In the meantime, you've got an accelerating pace of earnings in an index like the Russell 2000. I would say avoid the lower quality, no earnings part of that index, however.
Right, and as we get into the thick of earnings season, that's going to be critical. And real quickly here, given the losses that we're seeing today, if you step back, is this a time to buy the dip? Do you maybe want to get a little bit more defensive heading into your end?
Depends on who the investor is. I think all or nothing, or get out, picking a moment in time, that's not investing. That's just gambling on moments in time. Investing should be a disciplined process over time. So dollar cost averaging tends to be a great discipline. So is rebalancing. Rebalancing is a great discipline because you're adding to where there's been underperformance, but you're also trimming in areas where there's been outperformance. It's not discussed all that much. Maybe it's a boring topic on FinTV.
Yeah, no, I love it. Let's talk rebalancing.
Rebalancing is a great discipline.
All right, awesome. Well, Lizanne Saunders, thank you so much for coming in. What a day, and especially in studio. Appreciate it. Well, coming up on Yahoo Finance Opening Bid, our own executive editor, Brian Sazi, joins us now. Brian, what's coming up on the show?
Good chat there, Allie. More Lizanne Saunders. Good to see her in the studios. Always love listening to Lizanne on markets. Look, we're seeing a market sell-off. Banks are under pressure. Talked to Amex CEO right after earnings this morning. That company blew it away. Stephen Squeri telling me not seeing a financial stress spread to his company, so that's a good thing. And we're going to dig more into the future of Starbucks with CEO Brian Niccol.
All right, lots coming up. I'm excited for its size, but that does it for Morning Brief. Much more ahead on Yahoo Finance.